Bitcoin will go to fucking zero in a microsecond, whoop, like that. And when the real founder of Bitcoin comes out, it is my humble opinion, and there's nothing humble about me, Bitcoin will go to fucking zero.
So the market cap is $2.168 trillion. And now the market, oh, it went to zero. Yo!
GM, welcome back to the channel. In this one, let's have a look at the macro doom that is on the timeline right about now, with some crypto updates as well, some news events, that kind of stuff. If you enjoy it, make sure you do subscribe to the channel, and we'll jump straight on in. So as we look at the BTC chart here, you can see the BitBoy arrest 26K has held as a low right about now. This was near the bottom for sentiment over the last month. We've also got the pivot point on the chart, 27K mapped out here. Dailies need to close above this level, otherwise we are looking bearish, range lows in play. But as we stand, $500 above that level of 27K, and things not too bad here, especially when you look at the charts of traditional markets. SPX here down bigly over the last week. We've also got the Nasdaq down almost 2% yesterday alone. And so the fact that crypto is showing some form of strength, even while TradFi is puking a bit, that is obviously a good sign. Now, will we see a reversal for TradFi markets? This will come down to this major 107 level here for the DXY. As we can see straight out the gates here, it has been rejected from this resistance at 107 right about now, currently down to 106.79, a hairbreadth away. So nothing major right now, but could this be a deviation above and close inside? That would obviously give some respite to risk assets, the SPX, the Nasdaq, and potentially BTC could get some more follow through off the back of that as well. So as Tina posted here yesterday, all the macro accounts I follow appear to be collectively shitting themselves about the economy again. Very cool indeed. So what's been going on here? Well, there's some big moves over in Japan affecting the US, as they are a huge buyer of US treasuries. So Ted talks macro with a breakdown here. What's going on with the yen here is very important. So monitor this closely. The 150 level is the Bank of Japan's level. That is very clear from now, and any higher they risk a rapid devaluation of their currency against the major forex crosses. He continues on, higher yields and rates attract more investors to cash, whilst lower tempt them back to take on more risk. So if the BOJ can tame the yen devaluation here, expect yields to peak and a bid to potentially come back to risk assets and maybe even shitcoins. But how do they do it? So there's two options here. If we do get this positive outcome, he says historically they intervened in the forex or fixed income markets, buying bonds or purchasing the yen to keep a lid on yields and prop up the yen. However, this may not be enough long term, which leads to a potential bearish case. So he says if the BOJ needs to tighten to avoid rapid devaluation of the yen, then we have a big risk to risk assets. So Japan are the largest foreign holder of US treasuries, and the last thing the US market needs is Japan to start unloading those on said market. So you can see the 150 level up here top right, a rejection from here over last night. So what was the reason for the rejection from the 150 marker USD to Japanese yen, I wonder? So it looks like they have been intervening here. So Japan's senior MOF official, no comment on whether Japan intervened in the forex market yesterday. Kongs points out here, we did not have sexual relations with that 150 resistance level. And as you can see from the chart here, it did reject from 150 quite swiftly there. And so you can see that they've gone with option A, intervention via purchasing the yen to keep a lid on yields. Meanwhile, over in the US, we're seeing the amount of debt just absolutely spiral out of control. Sven Heinrich here, this is what happens when you give the government an unlimited debt ceiling through 2025. He also says this, the perfect doom loop is now underway. And so we have this from Fajao as a response to this. We call this a debt spiral, and the bond market is finally starting to care about it. The only way is yield curve control. You fix the rates at a certain level and defend that level through infinite QE and financial repression. The currency is the exhaust valve in this scenario, and USD is the cleanest dirty shirt and will be the last shoe to drop, making the DXY surge, i.e. the milkshake theory. So that is the reason why DXY has been on a tear. Everything is priced in the USD, therefore the devaluation will cause US denominated assets to surge higher. Your goal as an investor is to find a life raft that matches this devaluation but could also outperform it. Crypto is such an asset, and so are tech stocks. So from the macro heads that I do follow here, what I'm getting from this is the fact that there's going to be intervention on the horizon very soon, but the goal is to actually try and survive the moments of hawkish reactions to these major functions. So of course there is a bit of a gauntlet to run during that time frame of QE is on the horizon because things are going tits up in macro land. But during this time period, we're going to get some decent prices, potentially even lower prices. So you should be on red alert for that. But that is not as well a given. It doesn't mean we have to have some big financial collapse. And a lot of this bearish talk probably does coincide with a bottom being formed here, especially when you look at the SPX and the NASDAQ. They've just shit the bed, and thus we're seeing all the macro doomsday come out in abundance. Zero Hedge posted this. Everyone knows what happens next. An unexpected crisis, bigger than COVID, hits out of nowhere, and the Fed monetizes the crap out of the US debt/deficit, period, the end. And he says they're not going to care about inflation because the alternative is a collapse of the bond market. So we're going to get QE/YCC, but do they predicate this off the back of another major unexpected crisis? Maybe COVID round 2. So let's move away from the macro doom for just a few seconds and look at a potential positive news headline for crypto here. So FTX previously in 2022 invested into Anthropic. So this is an AI competitor to OpenAI. They have their own ChatGPT thing called Claude chatbot that is a large language model, and it's now being valued at $20 to $30 billion. And apparently Google are now coming in for a second round on this thing, valuing it at between $20 to $30 billion. This will put FTX original stake of around 500 mil to around 3 to 4.5 billion even. So this could unironically actually plug the full gap of the deficit over at FTX via one of these weird trades and major investments that Sam and team actually made during 2022 when they were commingling all sorts of funds. So a potential silver lining there for all the investors who lost out big. This, of course, will be good for crypto markets. The more of these distressed lenders, exchanges, those kind of earn programs that get made whole, the more bid that's going to come back to the crypto markets more broadly. Let's move on to this one, quite amusing. So this horse on screen here, over on the photo finish game, Shockwave is its name, a 3-year-old stallion. It has been studded out over the last 7 days to the tune of $35,000 US. So 35K has been spent on the virtual horse Semen here in that game. I repeat, $35,000 US in the last 7 days on this horse's virtual Semen has been spent. Now that is a sentence I did not expect I'll be saying this morning, but this makes me very bullish on this game and the churn of NFTs within this game. They are effectively paying out that amount of money to generate more of these good genetic NFTs in the horse racing game. Now, just to note, tomorrow on the 5th of October is the staking deadline for the next season. So if you've got Crown, the Crown token, full video I've done on that thing, a deep dive, go and watch it. It's very, very interesting. You have to stake it on a track by tomorrow to get your entitlement into the Derby token, which is a stable coin from these race course tracks. Each person who races on the race course has to put some Derby down. You also get a share, a rake of all the bets as well for staking your crown. The rough ROI per season, which is only just a 4-week period, is around 5%, annualized 60%. So that is pretty damn decent returns. Deadline tomorrow. Then we have a confirmation from yesterday's news that was breaking around Rollbit potentially doing their buyback and burns on chain. And that is now confirmed. They are doing them all fully on chain. And so this is going to be quite an epic one to watch, and it should see the chart move into up only mode, and especially as the degens get a bit of confidence if BTC doesn't shit the bed here. So Rollbit doing the buyback and burns, as Tina posted, RLB up 50% as people begin to price in a team not having to pay for Gainesy's bets. And Gainesy famously deleting all prior tweets of his ambassador program at Rollbit. Let's check out the chart here. You can see it is up to around 15 cents this morning, quite a bit of cheating. So if you're an on-chain sleuth, some big holders actually profited massively off the back of this recent move and have taken some profits, hence it's down a bit here. But in terms of like a long-term, or at least the next couple months, maybe prior to Christmas, I do think we're going to see the range highs tested once again, up around 20 cents at least, probably break even into a new all-time high due to the fact these buyback and burns being on-chain now legitimizes the business a lot more, and it actually puts a lot more pressure on token price as well. They were previously doing it in-house on the SEX itself, the centralized betting platform exchange, etc., and it obviously wasn't having a huge impact on price. But when you come to the main liquidity pool here on Uniswap, it is going to have more of an upward price trajectory for this in terms of number go up tech. So I think this one will sustain a good rally here, and that kind of trend line is actually one that I think will start to move up towards over the next few weeks here. Then we have Gensler getting a smack in the teeth again, absolutely epic here. The judge rejects SEC's motion to appeal the Ripple ruling. So the XRP army getting some absolutely tremendous news there. Gensler in tatters. What more could you want? And then this from Chris Beniski, showing you that you should be DCing in. If you can have that kind of foresight to look back on this moment now, this is very likely going to be a very obvious moment during the markets. We've got macro doom. We've got a Bitcoin spot ETF on the way. We have the BTC halving on the way, and the prices are still at shit levels. So in 2024, 2025 and beyond, when you look back on this period, do be aware we are in an absolute trough of price action right now. Everyone is uncertain of what is going to happen, but there's some major known knowns on the horizon here. So don't get stuck into the trap of just falling into the bear market PTSD. Continue to DCA like a crazy person, and it will pay off massively in the next bull run. My plan is personally to put away at least 5 years worth of expenses during the next bull market and put them into a savings account as British pounds off-chain in an actual bank, and this will give myself breathing room and a lot of freedom to make sure I'm doing exactly what I want with no pressure. And I genuinely believe the majority of people can achieve that if you put together a structure, if you work towards a plan, and you just don't give up. So let's sign off here. BTC up to 27,536. We have XRP, AVAX, Polygon, Rollbit, and Frax, some of the market leaders. Down we have Bitcoin, Satoshi's Vision. Sorry, Craig Wright, you're a dick. Aave down, eCash down, Stacks down, Radix, Arbitrum, DYDX. So that is all from today's video. A bit of macro, some updates, some news, some horse semen. What more could you possibly want? Subscribe if you're new, and I'll see you in the next one. Peace.